Welcome back to the deep dive. It is Wednesday, February 4th, 2026. And today we are doing a checkup, not on a patient, but on the doctor.
Or maybe on the company that builds all the tools the doctor uses to see inside you. We are talking GE HealthCare.
Exactly. And it's a fascinating moment to be doing this. They just dropped their Q4 2025 earnings.
And if you just skim the headlines, it looks fine. Business as usual. But when you actually dig into the source material, the transcript, the press release, the slide deck, which is what we're doing.
It reads like a suspense novel. It really does.
Yeah, because on one side, you have this incredible innovation engine. We're talking nuclear medicine, AI, the cloud.
And on the other, you have this giant looming obstacle.
The macroeconomic villain of the story, tariffs.
Tariffs. It's a classic conflict. So our mission today is to really unpack how a medtech giant navigates a trade war while trying to revolutionize, how we diagnose disease. We've got all the documents.
Let's get into it.
Okay, I want to start with what I'd call the ouch moment, because usually when companies talk about headwinds, it's all very vague.
Right. Market softness, currency fluctuations.
Yeah, but GE HealthCare, they put a very, very specific price tag on their pain in this report.
They really did. And it is a steep price. Management was incredibly transparent about the negative sentiment around these trade barriers. In the fourth quarter of 2025 alone, so just 3 months.
3 months.
Tariffs cost the company around $100 million.
Wow, that is staggering. $100 million in 90 days.
And it gets worse if you zoom out. For the full year 2025, that number balloons to about $245 million.
$250 million.
$250 million in operating profit.
Just
evaporated. Gone.
Yeah.
Because of cross-border duties.
So let's play the what-if game then, because if I'm an investor, I'm looking at that and thinking, well, so much for growth this year. But that's the twist.
That's the twist. They didn't shrink. And that's why it's such an interesting case study in resilience. Despite that massive anchor, they beat expectations. Revenue was $5.7 billion for the quarter.
That's up nearly 5% organically.
And they beat on profit, too. Adjusted EPS earnings per share came in at $1.44. The consensus on the street was what, $1.40?
Right. But here's the what if that makes it all so stark. The CFO, Jay Sicaro, he laid this out.
He did. He said if those tariffs just didn't exist, if the trade environment was neutral, their earnings growth wouldn't have been flat to slightly down.
It would have been up 11%.
11%.
That is the difference between an okay year and a blockbuster year.
Precisely. They're performing at a blockbuster level operationally, but the environment is just eating the profit. It really shows you how much friction there is in the global system right now.
Okay, but they didn't just complain about it on the earnings call. I was struck by how aggressive their response was. They're physically moving the chess pieces on the board.
This is the supply chain agility piece. You can't just wish away tariffs. So what do? You pick up entire production lines and move them.
They moved a PCT manufacturing line, and these things are massive, complex machines.
Not toaster ovens, no.
They moved it from the Middle East into the United States.
And a surgery line from Asia to the US as well.
I just want to pause on that. I don't think people realize how hard it is to move a line in medtech.
Oh, it's a nightmare. I mean, every time you touch the manufacturing process, you trigger a regulatory event. You have to revalidate everything, get FDA sign-offs, qualify new suppliers for every last screw.
It's like performing open-heart surgery while running a marathon.
It is. But they did it to dodge the duties. It shows they aren't just passive victims of trade policy. They're actively engineering their way around it. It's a masterclass, really.
Speaking of engineering, let's talk about how they're managing things internally. There's a term that kept popping up on the call. The CEO, Peter Arduini, he kept saying heartbeat.
Yes, heartbeat.
And when I first read that, I honestly thought it was a new cardiology device.
Like the GE heartbeat. I get it.
But it's not a product at all.
No, it's something much more boring, but arguably much more important. It's their internal operating system. Think Lean Six Sigma, that kind of thing. This is just their branded version.
They use an acronym, SQDCI.
Safety, quality, delivery, cost, and innovation.
Which, it sounds like the poster in every corporate break room in America. Is this just corporate speak, or is it actually doing something?
It's a fair question. But Arduini credits this specific system with fixing a huge operational problem they had.
The backlog issue.
The past due backlog.
Yeah.
Basically, orders they couldn't get out the door. You're missing one chip, one cable, and the whole multi-million-dollar machine just sits there.
You don't get paid until that machine is installed and running in the hospital.
Exactly. So Heartbeat was the intervention. By applying this SQDCI framework, they drove a 25% average monthly improvement in clearing out that backlog.
25%. That's a huge number. That's a quarter of the problem gone every single month.
It is. It's the unsexy operational discipline that actually lets the cash flow. It's like unclogging the arteries in the company.
A surprisingly accurate analogy. Okay, so operations are tight, they're dodging tariffs. Let's pivot to the fun stuff, the toys. The slide deck calls this an innovation renaissance.
And for once, that might not actually be hyperbole. They are launching things that are, generational shifts in technology.
Let's start with the one that sounds like a superhero weapon, Flurcado.
Flurcado, yes.
Yeah.
This is arguably the most exciting thing in their pharmaceutical diagnostics division right now.
Okay, so break it down for me. What is it?
It's a new injectable, a tracer,
Yeah.
that you use to see blood flow in the heart for myocardial perfusion imaging.
But we've been doing heart scans with tracers for decades. Why is this one special?
It all comes down to the physics. For years, the standard has been something called SPECT imaging. Flurcado is made for PET imaging.
Yeah.
And without getting too deep in the weeds, PET is just better. Higher resolution, much faster, more accurate.
So it's like going from an old standard definition TV to 4K.
That's a perfect analogy. And the medical community agrees. The American Society of Nuclear Cardiology just came out with new guidelines recommending PET over SPECT.
So the tide is turning, and GE has the surfboard ready.
Exactly. But there's a catch with these radioactive tracers.
The half-life problem.
The half-life problem. This stuff physically decays. If a doctor orders a dose for a 9 a.m. scan and the delivery truck gets stuck in traffic, by the time it gets there at 11, that dose might be useless.
So the logistics are just as hard as the chemistry.
Maybe harder, and that's why GE is taking this go slow, go fast approach.
Yeah.
They're not flooding the market. They're ramping up very carefully.
I saw the stat on that. In the week ending January 23rd, they delivered 220 doses.
Which sounds tiny for a global company.
Incredibly small.
But look at the other number, 95% on-time delivery. That's what they're selling right now. They're selling reliability to cardiologists. Once that trust is built, the volume will follow.
And those volume targets are not small.
Not at all. They're targeting $500 million in revenue from just this one drug by 2028. Long term, they see it as a billion-dollar opportunity. It's a blockbuster drug hiding inside a device company.
That's fascinating. Okay, so that's the chemistry. Let's talk about the heavy metal.
Yeah.
There's a term in their slide deck for their new CT scanners. Deep silicon.
Ah, yes. That's the secret sauce in their new Photonova scanner.
Deep silicon. It sounds like a tech incubator. What does it actually mean for a patient lying on that table?
Okay, think about a normal CT. You shoot X-rays through you, they hit a detector, get converted into light, and then the light gets measured. It's a two-step process.
And you lose some clarity in that conversion?
It gets a little fuzzy, like making a photocopy of a photo. Photon counting, which is what this new tech does, it skips that middleman. The deep silicon detectors count the individual X-ray photons directly.
So the image is sharper.
Much sharper.
Yeah.
But more importantly, it gives you what's called spectral information. It can tell the difference between materials that look the same on a normal CT.
Give me a clinical example. Why does a doctor care?
The classic one is a stent in a heart artery. On a normal CT, that metal stent just blooms. It looks like a bright glowing blob. You can't see inside it to check if the artery is narrowing again.
Right.
With photon counting, that ballooning effect is gone. You can see right through the stent. It completely changes the diagnosis. It saves the patient from a much more invasive procedure.
Incredible. Okay, so we have drugs, we have hardware, but there's a third leg to this stool, and they seem to be betting the farm on it, the cloud.
Specifically, this massive $2.3 billion acquisition of a company called Intelerad.
Unpack enterprise imaging for me, because to most people that just sounds like, we store JPEGs.
It's the silo problem.
Yeah.
In a typical hospital today, radiology has its server for CTs. Cardiology has a totally different system for their scans. Orthopedics has another one.
It's a mess. They don't talk to each other.
It's a nightmare. A doctor trying to get a full picture of a patient is logging into 3 different systems. Intelerad fixes that. It's a cloud platform that just sucks in images from everywhere and puts them in one unified viewer.
So it's the one ring to rule them all for medical images?
Basically. And for GE, it's a huge business model shift. They're not just selling the box anymore. They're selling the software infrastructure that runs the whole imaging department.
And the margins on software are usually a lot nicer than on big iron hardware.
Much nicer. Intelerad has 30% plus EBITDA margins and it's a recurring revenue.
Hmm.
Once a hospital's on your platform, they rarely leave. It's incredibly sticky.
So you inject the GE Flyrcado, you scan with the GE Photonova, and you read it on the GE Intelerad cloud.
That's the vision, the complete ecosystem.
Let's zoom out to the world map then, because when you look at where they're selling this stuff, it really feels like a tale of two different worlds.
It's completely bifurcated. On one side, you've got the US and EMEA, Europe, Middle East, and Africa. Those markets are surprisingly strong.
The CEO mentioned a survey of their U.S. customers that I found really interesting.
Yes. They asked the big hospital systems, and the feedback was bullish. They're planning to invest more in capital equipment in 2026, not less.
Which is counterintuitive. You keep hearing about hospitals being broke, labor shortages. Why are they buying more expensive scanners?
Demographics.
Yep.
Population is aging. We have a tsunami of chronic disease, heart failure, cancer, Alzheimer's. You simply cannot manage those patients without advanced imaging. The clinical need is forcing their hand.
So the West is strong. But then you look east to China.
The China story is complicated. The words they used on the call were cautious and prudent.
And prudent is CFO speak for, this is not going well.
Pretty much. They have actually budgeted for a decline in their China revenue for 2026.
That's a big deal. For years, China was the growth engine for everybody.
That engine has sputtered. Now they see some, green shoots. They're winning more tenders in the government buying programs.
But winning the bid isn't the same as cashing the check.
Exactly. The revenue isn't showing up yet, so they're wisely keeping their expectations very low. If China bounces back, it's all upside. If not, they won't miss their numbers because of it.
Which brings us to their safety net. Despite China, despite tariffs, they seem very confident. And I think it comes down to one number in this report, $21.8 billion.
The backlog. This is the most important number for stability.
Our record backlog, right?
It is.
Yeah.
And you have to think about what that represents. That's $21.8 billion in signed orders. Hospitals saying, yes, we want this machine. Here's the contract.
So even if the entire sales team went on vacation for the next 6 months?
The factories would still be running at full tilt. It gives them incredible visibility and buffers them against any short-term storms.
So what are they guiding for the rest of 2026? What's the promise?
They're guiding for 3% to 4% organic revenue growth.
Which feels realistic, maybe even a little conservative.
It is. It bakes in that China drag. But look at the profit line. They're guiding for adjusted EPS of $4.95 to $5.15. That's growth of 8% to 12%.
So revenue grows a little, but profit grows a whole lot more.
And that's the magic of operating leverage. That goes right back to Heartbeat. They're squeezing more profit out of every dollar of sales. They're getting more efficient.
So to wrap this all up, if you had to summarize the state of GE HealthCare in early 2026, how would you frame it?
I'd say it's a story of a legacy giant proving it can still dance.
While wearing a really heavy backpack.
Exactly. You have this high-tech innovation battling macroeconomic friction. And right now, innovation is winning. They're using efficiency, that Heartbeat system, to offset the tariffs. They're using that massive backlog to bridge the gap in China.
And all the while, they're planting the seeds for the next decade.
The seeds that will define the future of medicine. Flyrcado, the cloud, photon counting.
You know, what's striking to me is how much of this progress is about logistics. Moving a factory, ensuring a radioactive drug arrives at 9 a.m. sharp, connecting a server to the cloud.
The science is useless if you can't deliver it. And they seem to be mastering the delivery.
So here's a thought to leave you with. We spent a lot of time on Flyrcado, which is a drug, and Intelerad, which is software. GE HealthCare is famous for its big, heavy metal scanners. But are we moving toward a world where the scanner itself becomes a commodity?
That is the billion-dollar question, isn't it?
Doesn't matter who builds the metal box if the real value is in the chemical tracer running through your veins and the AI in the cloud that reads the scan.
If you're GE, you want to own all three. But if you had to pick one for the future, you might just pick the data and the chemistry.
Something to think about. We will be watching very closely. That is it for this deep dive. Stay healthy, and as always, stay curious.
See you next time.